Hi everybody, Cheryl Knowlton, Dynamite Productions here with my favorite sidekick.
Hi again.
Clay Johnson with Castle & Cook Mortgage. So today, let's talk about the Fed and interest rates. They are historically low again.
They are so good. You know, and it's
Yay.
interesting because we were in a big, with the Federal Reserve, the challenge is people hear that in the news and they think that, hey, this has a direct correlation with my 30-year mortgage. And it actually doesn't. So it affects like car loans, it affects home equity lines of credit, kind of your short term. It's really the overnight lending rate that affects, which has a direct impact on the prime interest rate. Now there can be a trickle down effect, but right now what we're looking at, so we just saw the first cut that we've seen since they just raised everything. Things were doing good. They kind of gave us some raises for a while. We set stagnant, and then we just saw the first cut. I think it was in 8 years that we saw. So that is going to have a little bit of a trickle-down impact. Gives the markets a lot of confidence, and they expect that over the next, between now and the end of the year, we'll probably see 2 additional overnight lending rate cuts. So, but people say, okay, then what affects the long-term mortgages? And there's 2 things. Number one, the thing that's really helping us right now, because we're the lowest we've been in 3 years.
In terms of 30-year fixed rates.
30-year fixed rates. And a lot of it's the global uncertainty. It's the trade war kind of between us and China, what's happening as far as that's concerned, kind of the economic uncertainty. That drives a lot of activity into secure markets like mortgage-backed securities and treasury bonds. And the value of those goes up, the yields go down, the rates follow the yield. So whenever there's kind of that kind of economic uncertainty, we're the smartest kids in the not so bright classroom sometimes.
Great analogy.
We've done really well. So those as secure investments with us have been really strong, and it's really helped the rate. So we've seen kind of the best of both worlds where the overnight lending rate and the long-term rates are both doing phenomenal right now. And people say, when is it worth it? Well, for every 1% the rates go down, for the area median income, it's going to raise your purchasing power about $20,000.
Wow.
So yeah, it's pretty cool.
Yes.
And a lot of folks are taking advantage of the additional savings right now with rates being so low from where they've been on a historical level.
That's fantastic. So next time in our second episode, we're going to talk about when is it advantageous for you and or your clients to refinance. So come back to tomorrow's episode and we'll see you then.
Bye-bye.